Hello folks, Jon Najarian here talking about covered calls. And one of the questions that I always get asked is, why are covered calls such an important strategy to you, Jon? And my answer is that if you had an apartment, wouldn't you want to collect rent every month? Well, with covered rights, that's exactly what you're doing. Let me use an example of Apple. Now, presently, Apple's approximately $148 a share. So 1,000 shares of Apple would be $148,000. Now, you'd want to collect rent, in other words, call premium, by selling an upside call, perhaps the 155 calls, against that 148 value stock. Now, when you do that, every month that money just rolls in, whether you're doing it weekly or whether you're doing it monthly or even quarterly. That money just rolls in as time decay works in your favor instead of against you. That's one of the things that's so powerful about the covered right strategy. So if this sounds like something that appeals to you the way it appeals to me, you've got to sign up for the Covered Call Masterclass. It's something that will take you through step by step so that you'll be comfortable and confident enough to do it on a weekly or monthly basis, just like I do. Hey folks, welcome back. I am Jon Najarian, and this is 3 at 3. Every business day, we bring you unusual activity at about 3 p.m. Eastern Time. So set your watch to it and join us, if you will. You can also pick it up, of course, on our YouTube channel, which if you go to YouTube, that's just youtube.com, and then you insert in the search mechanism of YouTube, Market Rebellion. You put in Market Rebellion and we will come up. Pete and I and a host of our other brilliant folks will come up for videos, thousands of them, and you'll always be able to catch unusual option activity, Pete's The Take, the Daily Crypto Bite, our roundtables and so forth there on our YouTube channel. So that's YouTube, and then you just search for Market Rebellion, click subscribe. Thank you. It's free. Completely free. All right, let's get started with this, the 29th of July, 2021. This is being presented for educational and informational purposes only. This is not investment advice, and of course, all investments involve risk. Intellectual property rights, yes, we have registered marks, we have trademarks, we have patents, we have copyrights, we have all of that on virtually everything you're about to see. So, feel free to share it with your friends, retweet it, post it to Facebook, post it to LinkedIn, put it wherever you like, but we ask that you do not use it in a commercial venue without asking us first. Thank you. There was the halftime crew today. Sorry, not sure what that was. That's the halftime crew today. Steve Weiss, Josh Brown in the middle, the judge on the far left on top, and then Anastasia Amoroso, me, and Carrie Firestone. And we were talking about Robinhood at the time. I had some disagreements with Josh, still have those disagreements. Doesn't mean I hate Josh, but I don't think everybody on the Robinhood platform is a gambler. And I don't think anybody that accumulates 22 million users is something that just goes away if trading slows down. They may not meet projections for earnings, if indeed that happens, but the same would be said of Charles Schwab, of TD Ameritrade, of Interactive Brokers, of anybody. So in other words, if we say, well, what if the speculation goes bad and people just stop trading? Well, I imagine it hurts those guys too. Does Robinhood have the same ways, the same levers to pull to make money as those firms? Yes, they do. What Robinhood makes money from is payment for order flow. True. They also make money from margin lending. So you have deposited money in your account and they can lend it out to somebody else. Well, they make a spread on that. Same way Schwab does, same way TD Ameritrade does and so forth. Is their account balance as large as Schwab's? No, it is not. Schwab's been around for decades and decades and decades and decades, but they do have 22 million accounts versus Schwab's 30 million, and they did that 22 million in a very short period of time. So I don't think you could just say, well, if trading slows down, it's going to hurt these guys. Yes, it will. It will also hurt all of those other brokers I named. We can just move on from there. Williams-Sonoma talked about this one yesterday. We talked about that unusually heavy buying of November 170 calls. I think it was a day or two ago. I think it was just yesterday. That's right, it was yesterday, and Pete was the one talking about it. I cited it, and take a look at what the price of the stock was back then, folks, and then take a look at where it went today, 159.25. Bang. That's a pretty nice move. And I'm sure all of you would like, just as I would, to have an account loaded up with winners like that. Got to take the winners with the losers, folks. But this one, clearly a big winner, closed yesterday at 156.55, and it's nearly $3 higher than that today. And if you're somebody like me that bought the at-the-money call, you're a pretty happy camper. I also sold upside calls yesterday and today against this position because I didn't buy those 170s, as I told you yesterday. Let's start with Workhorse, WKHS. Workhorse is an EV maker, folks. It's down 35% in the last month, or actually 2 months, I think. End of May, maybe it was that it was in that $17, $18 range. But now here it is, trading at 1186. So trading at 1186, I like it. I see unusual activity, 3,500 of those August 14 calls. So did I buy the August 14 calls? No, I did not. Why didn't you buy those, John? That's what everybody's buying. Yeah, but I like moving the odds into my favor. And one of the ways that I do that is by purchasing an at-the-money call rather than just asking the stock to make that extraordinary move. If it makes that extraordinary move, then you'll be very happy that you bought those August 14s and didn't buy the at-the-money and sell a higher strike like I did. But that's the way I trade, folks. I move the odds into my favor. So instead of buying with the stock under $12, instead of buying the 11 or the 14 calls, I bought the 12 calls and sold the 14 calls, buying the 12 calls rather, paying $1.25, selling the 14 calls for 70 cents. That means I'm less than 50 cents deep in the trade, really. Or I'm sorry, just over 50 cents deep in the trade, and it could go to $2, which means that I have a 3-to-1 risk reward. I like that. That's the way I like to play. Now let's talk about that chart. That's the Workhorse chart, and there you see when it peaked at nearly $18 towards the middle or end of June. So I was right the first time in the last month. Now let's talk about Rio Tinto, RIO. I mentioned on the halftime report that I've seen a lot of unusual activity in the miners. This one, no exception. They're buying these Rio calls, January, 96.57 calls. I know that's a weird strike. It's just weird. But that is the strike. I didn't misquote it. That is the strike. They also sold the 99 calls against it. We know that because the heat seeker showed us both trades. Well, this was with the stock at what? 89 bucks. It's a little higher than that right now, trading 89.40. So you're up 40 cents if you're in the stock. But I bought the at the monies in here and I sold the out of the monies because more or less that's the way I play all the time, folks. I'm going to buy an at the money call, sell an out of the money call against it, in particular when it rallies like this, so that I can get a little bit more or less, we call that legging into the trade. Now let's talk about yet another miner, Freeport, FCX. Now, many of you know that Freeport has done this. Look at that big fall off from June when it was $44 all the way down to this. Well, might be a pretty interesting time to pick it up, right? So Freeport, whoops, why do I have 14 calls there? These aren't the 14 calls. Let me see real quick. I'm going to tell you what it should say. Let's see here. Freeport. Those must have been the 40s, I'm thinking. But let's see here. Freeport. There you are. October 40 calls in Freeport. October 40 calls in Freeport. So I apologize for my misstep here. I'm kind of rushing. But October 40 calls is what they were buying. The stock is 38.43. I bought the 38 calls. Let me tell you where those are now. Let's see. Freeport, and we're going to slide on over to options and look at the October timeframe. October 15th is the expiration out there. Those OC 40s right now are trading $2.54. They've moved up by about a dime. They were $2.44. They're up to $2.54 now. And the 38 calls are trading at $3.30. They were $3.20. So they both moved up by about 10 cents. So I bought the 38 calls. I sold the 41 calls. Why? Because I'm looking for risk reward, and I don't want the stock to have to outperform like crazy for me to make money. So the differential between those two strikes, $3. I own the right to take it at 38. I have given somebody else the right to take it from me at 41. That differential is $3. I paid $3.20 for the one, sold the other at $2.05. So there you go. I've got a nice risk reward because I paid $1.15 for that, and it could go to $3. I like my risk reward, and I always want a risk reward that is over 1-to-1. Bang. Here's that graph again of Freeport. And I apologize, folks, but those were, again, the October 40s that I was talking about. By the way, those are up now to 6,500 of those October 40s have changed hands. Learn more about Market Rebellion by going to Market Rebellion. What a shock. If you go to marketrebellion.com/UOA, that's unusual option activity, well, then you can see all about the offerings we've got for unusual option activity. If you just kind of nose around on the site, marketrebellion.com, you might see a whole bunch of other things that might be interesting to you. So check it out. Thank you. Sorry, secretary's out. Let's talk about questions. You can direct them to me at Jon Najarian. That's at JONNAJARIAN on Twitter. So let's get to this first one. This comes our way from Daniel Green. And let me just put this down here. DANIELGREEN, the number 2. John, do you always sell upside calls on the unusual options you find? Also, do you always sell it right away when the opening leg, or do you wait for the stock to move higher so it brings in more and possibly even enough to cover the long leg? Yes, I nearly always sell upside calls. First question. Second question, I do leg into it, as I've said before. I buy the call, and then if the stock's moving, I sell the call against it. Sometimes I get lucky, and you can even capture, just like you're saying, Daniel, you can actually capture the full amount and have zero money on the table. But that's rare. Usually I'm just cutting down the amount of money that I have to put up, and I'm impacting in a positive way time decay, because I've got one that's decaying that I own, the other that's decaying that I've sold, so it works in my favor. And I'm also impacting volatility compression, which I will get to in this next question, or next question after this, I guess. Jeff Monte, whose handle is NYCMONTE, New York City Monte. Morning, John. GLD, October 90 calls, 190 calls. Huge buying. Is that considered unusual? Yes, it is. And yes, they are buying huge numbers of those October 90 calls. I think it's in the tens of thousands already, perhaps pushing into the 30, 40,000 range already. And as I've said, a lot of buying in the minors, whether you're GOLD, gold, whether you're GLD, whether you're Freeport, whether you're Rio Tinto, there's a lot of buying in the miners today. So yes, I see it. And yes, it is unusual. Now let's talk about this one, because this hits on that volatility compression question. So Apple, AAPL, this gentleman, Stephen, whose handle is at SD Harris, HARRIS 501, like the jeans. Please explain this. I bought one each of the AUG 160 and September 160 calls at the same time yesterday in the morning. As of now, I am up 30% in SEP and down 30% in the AUG calls, with Apple up today. Why is that? Please help me, Dr. J. Okay, I will try. So regular August expiration calls at the 160 strike are right now down. Let me see, those are regular, right? Just making sure. Yep. Regular August 160s, because they're so far out of the money and because they only have basically 3-4 weeks, I guess, to live, are down 9 cents, which is 30%. Meanwhile, your September options, which have considerably longer time to live, that's September 17th expiration, those are actually moving up with the stock, but not moving up 30%, not the way I counted anyway. They are only up a penny on the session. Let me see what the range of those is. Right now, they're 96 cents. Looks like those have been as high as $1.15. So maybe you saw it at the high of the day and they were higher. But the real issue here is volatility compression, because baby's been born. They came out with earnings already on Tuesday, and you've got a limited amount of time to be right for an August trade. So both of those are working against your August side of this trade, Stephen. And I like being long at the money, like I say, and short those out of the monies. Not telling you how to trade, Stephen. I'm just saying what I do. By the way, join the Rebellion today at marketrebellion.com/get started. You can see how we show you basically how we trade unusual option activity. You can also see tutorials for stock, options, futures, cryptocurrencies. You can see all of that at marketrebellion.com/get started. We've also got coaches and mentors there that are ready, willing, and able to help you. Thank you for joining me today, folks. I hope you have a great afternoon, and I'll see you tomorrow back here on Market Rebellion Television. Thank you.